Good morning, good afternoon, good evening. Welcome back for another video. My first video back in over a week and a half. If you saw videos last week, those were pre-recorded because I knew that I was going to be off this past week because of the birth of my daughter, Jemima Rose Costa. There she is. She's so beautiful. Thank you so much. I know she's beautiful. Thank you. But let's just go ahead and dive right on into this. And if you like this content, smash up that like button, subscribe to the channel, and leave a comment in the comment section. So first of all, I want to reiterate where I stand on some things. I do believe still, although my belief is waning, that medium term over the next now 4 months or so, I believe Bitcoin's price is going to go up to somewhere between $30,000 and $42,000. And I'll get into why my belief is waning in that regard. It has to do with CPI numbers. But then I've been saying this, I think, for about a year now. I'm not excited about 2024. I think that 2024 is going to be scary. And I know a lot of people have their hopes on 2024 because Bitcoin halving in March of 2024, that should be the exciting time. But really, it takes about a year or so, a little more than a year, for the effects of the halving to take place. And so you shouldn't be as excited for 2024 as a lot of people are who are hyping it up. But the big thing that I'm looking at is historically, when the Fed raises rates, I've said this before, I'll say it again, when they raise rates, as soon as they stop and then they pivot, we enter a recession. And if you look, this is a chart showing the last 70 years, I believe. Yeah, 70 years. And you can see dot-com bubble. We raised rates, paused. As soon as we started lowering rates, boom, recession. Dot-com bubble crashed. 2008, raised rates up until 2006, paused for about a year, started lowering rates in 2007, and boom, financial crisis, a huge recession, probably I think the biggest one since the Great Depression. And then you can't see COVID because my head's in the way, sorry, but we started raising rates, and then COVID crash came, boom, recession. Now, you could say, well, it was COVID, but no, that recession was coming. There was a yield curve inversion. That recession was coming. Then we've already had a yield curve inversion this time around too, but you can see, if I get out of the way here, we've raised rates very aggressively, and we're going to continue to raise rates throughout 2023. We're going to pause at some point, and then as soon as you start, well, first of all, when we pause, people are going to be very excited. Oh, the Fed pivoted. And then when we start lowering rates, people are going to be just as excited, and that is going to be the time that I'm going to be terrified, because what comes after that historically over the last 70 years is a recession. And given how aggressively the Fed has raised rates, right here, given how aggressively they've raised rates, I think that this could look pretty ugly. And so 2024, I think that there's going to be something really scary that happens in 2024, some kind of crash that's going to make people think that we're teetering. And then what's going to happen? Rates will go to zero. The money printer will be turned on, and I will be super bullish. But at some point, there's going to be extreme fear before that extreme greed. And so the clock is ticking. And so looking at Bitcoin here, we tried breaking through that $25,000 level. I remember I made a video around when that last CPI report came. Everyone was bullish, and I was like, man, I just feel like I'm the only one here on Bear Island. And some of you commented and like, yeah, I'm a bear too. And then that same week, we almost broke through that key 25.2 level, which I've been talking about for a while. We had 4 attempts to break through that level, but we were never able to break through. And then we're back down. And for me, it's just simply level to level right now. There's other things I'm paying attention to, but level to level, I do not have a bid set at this level, even though we're close to it. It's around 21.8, because last time we just broke through, we sliced through it like butter. But 21.4 was a key level of resistance. So I have a bid set at 21.4. I believe we will go down to that level at least before making an attempt to get through that $25,000 200 level again. And so just a reminder, I drew these lines on this chart. I drew them in early January, like the first week of January, and you can see how much we stuck to these levels, because that is what traders look for. And so I want to know where traders have their bid set. Technical analysis, it has a bad rap with some people. You're just drawing lines on a chart. What I'm really looking for is, where are the traders going to buy Bitcoin, and where are they going to sell it? And you can see they've been buying and selling at the same levels that I've drawn in this chart. And so looking at the levels here, it just does not seem likely, especially with Jerome Powell speaking this afternoon, probably before, right before you've watched this video, but with Jerome Powell speaking, and here's what I'm expecting from Jerome Powell. I think that he's going to sound a little bit more hawkish than usual, and it might actually scare people enough. When in the past couple months, when he's talked and he's been hawkish, people have been like, all right, yeah, we get the deal, Jerome. That's what you have to say. I think this time around, people are actually going to be spooked a little bit, and perhaps enough that Bitcoin will go down to the $21,000 range. We've bounced off of 22,000 a couple times. That support's getting a little bit weaker each time. So again, bid set at 21.4. That is not necessarily what I think is going to be the bottom. I don't really have a price target for a bottom. All I know is I'm setting a bid there for a quick scalp. We could certainly break below that. And if we do, here's where I have my eyes on next, is the bull market support band. Now, I am generally bullish when we're above the bull market support band, and generally bearish when we're below it. And you can see, we got below the bull market support band in December of 2021. We were below it all up, all of 2022 up until January. We hit some resistance there. We got rejected really hard around the time of the FTX collapse. I think we would have broken through around that time if it wasn't for the FTX collapse. But here we are, we broke through very cleanly, and we've been above it. We haven't come close to touching the bull market support band, the 21-week EMA and the 20-week SMA in all of 2021, as soon as we broke through that. And in 2019, when we broke through, we never came back and retested it. And so it'd be nice to see some kind of retest that is around, a little below this 21.4 level that I have my bid set on. Now, I'm not saying we're going to bounce off there, but I do believe that the 21-week EMA is going to be another key level of support. The 20-week SMA, especially given that it lines up with another important level around $19,700, that is another key level that we're going to see some support. But worst case scenario, what's the worst case scenario I could picture short term? We just sweep the lows again. We go right back down to $16,000. Do I believe that's going to happen? I would say probability wise, it is less likely to happen. That I would be very surprised if it happened, but it is on my radar that could happen. So it's just these are all things that I'm considering. It's all about probabilities. If anyone tells you Bitcoin is definitely going to do this or definitely going to do that, just don't listen to them. I try as hard as I can to not speak in that way. Now, one other thing I want to point out, it's just another metric, another tool for our tool belts to be looking at here. Bitcoin, I'm not going to read the article, but there was something that this article talks about that I want to take a look at here. Bitcoin may need to dip to 19.3K to cool Bitcoin profit taking, suggests new data. Now, I don't agree with that. I don't see where they're getting 19.3, but the thing that they talk about is short-term holder MVRV. The short-term holder MVRV score. So I talk about MVRV a lot, but I talk about short-term, long-term, all that conglomerated, if that's the right word, into one chart. Now, this chart that I'm going to show you is taking a look at specifically short-term holders, traders. Now, I'm a short-term holder. I am a long-term holder, very much a long-term holder of Bitcoin, but I'm a short-term holder in the fact that if you remember, I bought a Bitcoin long at around $19,700, and I closed it at $24,000. So what did I do? I'm a short-term trader. I traded Bitcoin. And so you can see here from this chart that anytime short-term holders, that this score gets around 1.2, in other words, that the aggregate of short-term holders are about 20% in profit, that is a time that you can generally expect we're going to cool off. And you see this a ton throughout 2019, 2020. We got to 1.2, cooled off. Then we had the big euphoria run, peaked at when Bitcoin first got to $42,000, because that was a very aggressive move up to $42,000. Within a span of a month, Bitcoin's price doubled. And so this score went up really high, and then we had a cool off that summer, bear season, summer of 2021. And then when Bitcoin got to $69,000, this short-term holder score peaked at 1.4. So if you see this chart and you're seeing short-term holders, that this score, especially in bear market territory, you see it get to 1.2, to 1.4. That is generally a time when you should be cautious and just expect that Bitcoin may need some time to either flatline or cool off. And so we're in that point where we are cooling off. Now, man, this CPI score, inflation is not coming down aggressively enough. And that is what has me, when I talked about earlier in this video, that has me a little bit nervous that maybe what we have in store for us in 2023 is to just range between $16,000 and $25,000 before that crash that I was talking about sometime in 2024. I don't know. I still believe that we will eventually break through this $25,200 level in 2023, and that we will, and if we do that, that it's going to be an aggressive move up to $28,000, and then we'll see, somewhere between $30,000 and $42,000. We'll start seeing the short-term holder score, maybe get up to 1.4 or 1.2, something like that. But I do believe that's going to happen. But man, if we were to see at the next CPI report, which is coming next week, inflation not coming down aggressively enough, or even it's on my radar, perhaps inflation going up, I may need to throw that out the window. This idea that we're going to $20,000 to $30,000 or higher. As of right now, I'm sticking with that, and I do believe that's what's going to happen. But got to be open-handed. Always got to be open-handed with things like this. So anyway, I think that's it for today. That's all I have, but I'd love to hear your thoughts in the comment section of this video. Where do you think we're going with Bitcoin? If you're one of those who thinks we're going to 10K, love to hear your thoughts. I'm always open-handed and open to reason with this. So give me your reasons. If you think we're going to the moon, we're going to put in new all-time highs in 2023, which I've heard some people say, I'd love to hear your reasoning behind that as well. But otherwise, I will most certainly be seeing you in another video. Peace.